What's up, everybody? My name is Amber. I am the founder of the Clarity Agency, and I love helping business owners simplify business taxes. Today, I'm going to talk about how your tax structure could possibly be costing you thousands of dollars in taxes every single year. We're just going to run through a few slides from my previous masterclass. If you want to watch the full thing, click the link in the description and it'll take you there. But for now, let's get into it. So a lot of people don't really understand what a tax structure is, and your tax structure is basically your foundation or your business blueprint. And it matters because it determines how you're going to report your income to the IRS, how much taxes you're going to pay, and it also defines your liabilities. If you're structured correctly, it's going to create opportunities for you to save so much money in taxes. Now, sole proprietor is anyone who is just starting out. This can be a freelancer, a side hustler, or any service provider. Great examples of this are like DoorDash drivers, or maybe you just started selling a product and you don't really have all of the logistics of the business together yet. You're just selling products. That would make you a sole proprietor. Now, as a sole proprietor, you really don't need any paperwork. You don't need an LLC. You literally can just start your business and run with it. Unless you're selling products, yes, like you'll have to register to pay sales tax and things like that. Now, with this tax structure, when you pay yourself, it's actually not going to be deductible for your business because you are your business at this point. You're just going to take an owner's draw, which is just a transfer from your business account to your personal account. You're not going to have to set up payroll or anything like that. Now, with taxes, you're just gonna file your business taxes on your personal taxes on a form called a Schedule C. No separate business taxes. The benefits to this structure, it's the easiest one you can possibly maintain. There's not really any paperwork. But some cons with this tax structure, you don't have any liability protection because you are your business. Anyone can basically come for your personal assets. And then you also are going to be paying self-employment taxes, which is basically taxes for being self-employed. You're paying Social Security and Medicare, which is 15.3% in taxes. Now, what if you're a single member LLC? This is where you take your sole proprietorship and then you file an LLC. This is really for any business owner who doesn't want their personal assets to be at risk, so they're going to go and file this LLC. Now, you do have to register with the state. You do have to get an EIN. You do have to renew your LLC every single year and make sure that you're keeping up with it. But now you are going to have a little bit of separation between you and your business. You're going to actually operate under that EIN now rather than just your Social Security like you were as a sole prop. Same thing as a sole prop though, you're not going to be able to pay yourself a salary. Anything that you pay yourself is just going to be an owner's draw. Same thing with taxes too. You're going to file your business taxes on your personal tax return. Now you do have liability protection. Your personal assets aren't really going to be at risk as they would be as a sole proprietor. That's the biggest pro to this tax structure. On top of that, with an LLC, you do look more reputable, more professional, and it gives you now flexibility to later change your tax structure. Now, it does cost just a little bit more than a sole prop. I honestly think that it's worth it. You are still taxed as a sole prop, which means you still pay self-employment taxes. Now, an S-Corp, this is honestly my favorite tax structure because there is so much that you can do with this. This is for business owners who are really profitable. You're making consistent profits every single year and you want to save as much money on taxes as possible. Now, you do have to have an LLC first to be able to then elect S-Corp status, which is you just telling the IRS, hey, don't tax me as a sole prop anymore, tax me now as an S-Corp. Now with that, you do have to now pay yourself a reasonable salary because you are now an employee of your S-Corp. You're not just your business anymore. There's actually that separation. The business is the business. You are now the employee. But the salary that you do pay yourself, you do have to pay the self-employment taxes on it, but you don't have to pay it on all of your profits as you would as a sole prop or single member LLC. And this is where the huge advantages come in. You will have to file an S-Corp tax return and a personal tax return, but you are going to save so much money in taxes. So if you made $100,000, you were taking that home, you're automatically gonna save $15,000 in taxes because you're not gonna be a sole prop or a single member LLC anymore. You get more tax write-offs, and because now you're also getting a W-2, it's gonna be so much easier for you to get approved for loans. Now, there are more rules and requirements with this tax structure, but the amount of taxes that you would save, it's going to make it worth it. If you needed a visual to compare all of the tax structures, here it is. As a sole prop and a single member LLC, you're going to pay yourself by an owner's draw, just transferring money out. As an S-Corp, you're going to have salary and you can take draw that aren't going to have that extra tax. Both sole proprietors and single members are going to pay self-employment taxes on all of the profit, whereas S-Corps are only going to pay self-employment taxes on the payroll portion. Now, tax returns, the first two are only going to have a personal return, while an S-Corp is going to have a business and a personal return. And then liability protection, the only one that's not going to have that is your sole proprietor. Now, let's take a look at the numbers. If you made $100,000, right, as I said earlier, if you were a single member LLC and you took home $100,000, you would be paying $15,300 in self-employment taxes. Say you're an S-Corp and you took home $100,000, and say maybe you paid yourself a salary of $30,000. Because you're taking that $30,000 in salary, you would have profits of $70,000. So with that, you would only be paying $4,500 in taxes. This is already a huge tax savings of over $10,000. Now, if you're ready to see if an S-Corp is the right fit for you, click the link in my description below and book a free clarity call with me. Let's see if it's time to make some moves.